Hey, everybody. Welcome to Charts and Coffee. All right, so we're doing a little experiment where I will be broadcasting into both the options room and the futures room while we're here in the YouTube. I don't know how this is going to work because it's a lot of it's a lot of rooms open at once, but I've been requested to do some broadcasting into the rooms. May not be something I'll continue, but I don't know if the computer can handle it all. Yeah. And I think, it also is causing a little bit of a problem is toss. Shocker. All right. So anyway, let's get back to our broadcast. I don't think I'll be able to do it in the rooms at the same time. So anyway, good to see everybody. Sorry about the tech failure. That was kind of an epic fail, but let's go ahead and get started with our show. All right, so let's just jump right into the comments and see what we have this morning. All right, so first of all, how much am I short in comparison to long? I'm still mostly long, Lucas. So the question is, how much am I short compared to long? So that's a great question because when you're in chop, as opposed to downtrends, right? You're in chop as opposed to downtrends. You have to wait for the upper end of the range to be able to find where that exhaustion level is. And chop is notoriously difficult to trade. And it's so tempting to trade the market when it's inside the choppy range as opposed to when it's at the upper end. And so I think the S&P is probably a really good idea where I am not bullish. I think overall we still have the structure of chop. And as long as we have the structure of chop, that means I'm looking for an overbought short as the market moves higher. This is not an environment where I say, well, we've had this sudden change of heart. The market's now bullish. The indicators that I use are not saying that at all. In fact, as we head up into resistance, this is looking better and better for a short for me. It's just waiting for the market to trade in the zone that you can do something with. So the difference is, do I have a situation where price is currently inside of a range that I can use, or am I waiting for it to get there? It's not about predicting. I see more predicting happening probably at a level that I don't recall throughout my 30 plus years, because all of a sudden it's become very fashionable, I guess, to predict highs, predict lows, predict fresh trends. I don't predict because that's not what I get paid to do. What we want to remember is wait for price to reach an area where your indicators, your process, your strategy is saying, yeah, now we want to blank, buy a call, buy a put, sell premium, whatever it may be. And I'm not ideally there yet because you can see where the top of the range is. But anywhere really, as we climb towards 4,500, anywhere in that range starts to become very toppy. But remember, that's 50 plus points where this market could find where ultimately the resistance is. So I don't have a lot of shorts yet. But then again, there are a lot of commodities that I do want to be long. Crude oil stocks relatedly. But then there's commodities that I want to be short in. We're already short TLT, looking at SLV. So it's really a mixed bag, which is pretty normal for chop, right? When you're in chop, as you travel from one end to the other, it's going to look some weeks, even some days or weeks, fairly bullish. And then other weeks, it's going to look really, really bearish. I'm surprised I haven't seen a lot of this stuff running around as we are right on the day before the big drop. That'll get thrown around a lot too. So thanks for the question. I appreciate that. Um, yeah. So when a market is in chop with a bullish bias, it's not unusual for me to be 80 to 90% long with 10 to 20% short. But the more the chop becomes established, as it has been on the indices, then I start looking into becoming uh, a little bit more evenly balanced. But really, at the end of the day, it's, do I have the setups? Have we traveled into the zone? Have we triggered the trade? And then can I go ahead and enter? And that's really where I'm in a little bit of a holding pattern. I don't have, looking at my hold, what I have in my trading book, I don't have a lot of open trades right now. I really don't. Is SLV in play? Absolutely. A couple markets we looked at yesterday. The VIX for a long, SLV for a short, and TLT as well. Now you'll notice in some of these situations, the underlying futures contract and the alternative ETF, the options of which we trade, are not super in sync. Don't be alarmed by that. That does happen, but I'm still using the futures contracts as the measuring stick, the setup, the levels that I'm keeping an eye on, and then I'm executing the idea using the ETF option, which I then presume through experience and watching these connections, I then will look for the action to basically play out on that ETF. And then because we've got the puts or calls, that's how we're engaging the market. That's how we're taking advantage of that idea. So yeah, I do like that silver short quite a bit. All right, next up, I impatiently entered NG. I don't know. I don't know when you entered, but I don't know that it was super impatient. I would just call it moderate, my friend. Yeah, I wouldn't call it impatient. So don't be too hard on yourself. I would just call it more of a moderate entry. We know the 55 is going to be one of the levels potentially in play, and it is. We know this market has a lot more attention. When we were trading this back in here, and even back in here, still kind of a well-kept secret. And then you can see when it wasn't so much a well-kept secret. And so now it's going to start to take on a little bit more volatility, arguably, as we transition from the uptrend to a little bit more sideways choppiness. I'm not going to be surprised to see this kind of action before we move higher. Now, remember that as we go into sideways action, these previous lows become much more important to our longs. I'm still bullish. I'm still building a long position. And I think the 55 is definitely a level to watch. So I don't think that it was too early. But as far as any tips for preventing falling knife, AJ, so that starts to precariously get us close to, crystal ball vision, right? Nobody knows that. Nobody knows that. We only know the structure of the market. Structure dictates strategy, and we follow a process. But to your point, are there cues that it might be a little bit more volatile, right? Yeah, that's going to be the yellow transition that we saw yesterday. So if you're concerned about that, then you can look for more oversold support, right? If you say, Rog, you know what? That yellow should make me a little bit more cautious. Let that be the dictator, but don't feel that we're ever going to know beforehand, like, oh, this is a falling knife and this is anything that starts to assume we know where the market's going to go, then we're starting to wander into delusion. But I totally understand the question. I get the gist. And so the best way to answer that is, again, go right back to the tools, go right back to your dashboard, which for us are our charts. All right. How do I trade a down market? And I'm not being silly. I short it, right? But how do we short it? So we short it just as we know there are uptrends where you can buy the dip. A down market should really be, how do you play a down trend, right? Because a down market could be a day, a morning. A down market just could be a very temporary state of being. What we're looking for is a higher probability down market. That's a down trend. So the first thing is structure before strategy, right? So the first thing is, yeah, I want to short, but when and how? Downtrends and on rips. And that's really it. So we want to focus on where the market has actually turned into a downtrend. Case in point, how many traders got aggressively short the ES in chop, only to basically get crushed by an oversold market and ultimately a short squeeze. This is not Schadenfreude. What I'm saying is, I'm not wishing anyone to lose money, but there are some things that just aren't qualified for short the rips yet. ES is not a short the rip. ES is still, let's find where the resistance is and wait for the market to get there, which is something that we are all awful at, right? I think we're all in our own ways awful about the patience it requires. I was doing the class over the weekend, which by the way, you can still join me for. We still have live trading starting up next Monday, the 25th. And one of the things I was mentioning in the class, and I do believe this to be true, trading is pretty simple. There's not much to trading. Open, high, low, close, crunch the numbers however you want. Voila, you've got your indicators, your secret squiggles, look at volume, look at time, mesh all that with price, and that's trading. It's not difficult. What is difficult, what's going to be difficult for the rest of your career is the discipline and the patience. And I think patience and discipline are the same, really. And so that's what becomes really difficult. I think a lot of traders will say, yeah, this looks like chop. Got it. But what do I do in chop? Oh, I've got to wait for the market to get up into resistance. Well, I don't want to wait. I want to do something now. And I think that little pig in the head is where we get into trouble. Wait for the downtrends. They will not, a downtrend does not appear in a day. It's going to take the better part of a week plus for a downtrend to really organize and confirm. And whatever tools you're using, Christian, whether it's grab candles or something else, I've got the beginnings of bearishness on the grab candles, but never confirmed on the JT multi. So thanks for the question. All right. So next up is, I love that I try things live. Yeah, Jody, I don't know how else to do it, right? You really don't know how it's going to work until you really do it. So I was hoping to be able to broadcast into the options room and the futures room and in the YouTube, and that just ain't gonna happen. So we'll see. So next up is UNG. So yeah, natural gas, UNG, Jim. Same answer as before. I still think we're in a buyable area. I still believe it's a dip. Keep an eye on the 55 propulsion. Let's jump on over to NVIDIA. Sure. Now, not a market that I would call a trend. Right. This is one of those markets where it's heading up, like a lot of things are in the broader indices right now. But it's chop. So in the context of chop, the closer I get to previous highs, to volume ledges, right? The closer I get to Darvis signals, basically in this area, this is where the slope becomes increasingly slippery. I think that for me, and especially with chop, I'm looking to fade this move. Not because I'm picking a top. That's just, stupid. Picking a top means you have an uptrend, structure before strategy. You have an uptrend and your strategy is, I know where the top is. Wow, talk about delusion. We never want to go into that. We never want to go in. I think we have a false impression that the greats in trading do that, and they don't. They do trade turns, but the turns have qualifiers. The turns have certain things that have to happen before they start to short. And that means they are putting structure before strategy. And so I'm not just going to pick something because I arbitrarily believe based on my secret squiggles it's too high. I think that putting the indicators, putting volume, putting volatility, putting the calendar all together tells us that NVIDIA is looking increasingly entering that overbought zone. Now, slow stochastic, ready, aim, fire. One of my favorite things is to use either one of those plus the V-score. And so now what I'm able to do with, kind of traditional indicators with Mr. David Starr's ready, aim, fire is use price to determine where the fatigue might be coming in and confirm that with my V-score, which is a study of volume. You put volume and price together, you've got something where you're confirming the sentiment, not only with price, but now a certain degree of size, of sentiment, of conviction, of commitment, right? That's what volume really tells us. So I would look at NVIDIA in that way. And then, stepping out to the ETF, what's happening at the ETF level? Where else is NVIDIA heavily weighted? What are those indices and sectors that could be influential? And that's where we definitely want to focus on not the long side from the middle of the range, but rather the long side from oversold levels and the short side from overbought. This is what trading chop is all about. And chop suckers people in to momentum breakdowns and momentum breakouts with a higher percentage than trends. In trends, you can get away with a lot. Momentum traders can buy breakouts. Pullback traders like myself can buy dips. In a downtrend, momentum traders can short new lows in that double red downtrend, and traders like myself can short the rips. Momentum and exhaustion traders do great in trends, especially uptrends. But chop is where things get far more difficult, because the things that worked in a trend stop working in chop. And that's what gets really, really tricky. So again, where is my opinion coming from? It's not because arbitrarily I've woken up in October and gotten bearish. I'm not. I see that the chop is there. And look how long the chop's been in place, since about mid-September. So this is not new. This is just, where are the previous lows and how can I fade that? And where are the highs and how and where can I fade that? So this is just chop. And all I'm looking for is to reach that zone where the sellers are waiting to beat this market like a piñata. And that's what I want to wait for, right? That's what I want to wait for. So that's the plan. All right. All right. Next up is Netflix. Sure. Netflix is an uptrend. I mean, again, before I even look at what I want to do, strategy, sea of green grab candles, double green. I mean, there's nothing to do but focus on the buy. And because we're in a trend, I want to buy the dip, right? Dip. We haven't had a great dip to the 21, but there's a more aggressive 13. It's the dip. And look, as long as you wait for some kind of pullback, even if it's really shallow, right? As long as you wait for some kind of pullback, I believe you're going to be far better off being a buyer at levels like that than being a buyer with momentum. I am not a fan of buying with momentum. I'm a fan of buying uptrends while we have momentary weakness, right? So you can buy uptrends with momentum. You can buy uptrends at exhaustion. The latter is the buy the dip, okay? All right, so I'm going to go ahead and wrap it up here. I'm going to be heading into the options and futures room this morning for the first hour of the day. Thank you, as always, for being here with me for Charts and Coffee. Thanks for your patience during my little tech experiment. And maybe we'll try something else some other time. But anyways, thank you as always. Caffeinate and dominate. Be good to each other. I'll see you tomorrow.